Mr. Sharmaji, a famous businessman from Delhi. He is running his business in the metro city of Delhi. He deals with leather items such as leather bags, jackets, purses, leather belts, etc. He decided to explore his business in the metro cities like Mumbai, Chennai, Pune, Calcutta, etc. For this, he wants to import some raw material from Brazil, which he needs for manufacturing good quality of leather items. While importing it, it would first land to the port and then from there it would travel to the manufacturing center at Delhi via road, passing through various states. Now when Mr. Sharma starts analyzing various taxes he needs to pay in the process of just transporting the material to his center, he will lose his mind. First, he needs to pay a custom duty along with the shipping charges. Then he would have to pay central and state government taxes and such like 10 different taxes like central excise, service tax, VAT, central sales tax, octroi, etc. etc. It's just not over. He also would have to pay tax on tax. The tax which is already collected by the government, he has to pay the tax on it again. Let's understand the previous tax structure. The product passes through various phases. Say manufacturer manufactures the product, then it is being delivered to the wholesaler, then wholesaler delivers it to the retailer, and finally from the retailer customer purchases the product. While passing through all these phases, the tax has to be paid. Let's assume that the tax is 10%. We will take one example. Say for example, if the manufacturer is incurring a cost of rupees 50 for manufacturing one product, he is going to add his profit as rupees 50 in it and he is going to sell the product for rupees 100. But before selling the product, he has to pay 10% on rupees 100, that is rupees 10 as a tax amount to the government. So finally, he is going to sell that product for rupees 110 to the wholesaler. Again, when the wholesaler is dealing with the product, he will add his value addition or you can say profit. Say for example rupees 10 and the selling cost is going to be 120 rupees. He has to pay 10% on rupees 120, that is 12 rupees as a tax amount to the government. So finally he is going to sell that product to the retailer for rupees 132. Then it comes to the retailer. The retailer obviously is going to add his profit or value addition, say rupees 10, and then he is going to sell it for rupees 142. But no doubt he is also have to pay the tax amount 10% on rupees 142, so it will come to as 14 rupees 20 paise. So finally he is going to sell that product to the customer for 156 rupees 20 paise. Now here you can see that there is tax on tax. That means here the manufacturer is already paying 10 rupees tax. Again the wholesaler is paying 12 rupees tax on the same product and the retailer is also going to pay 14.2 as a tax. So this is called as cascading effect of tax and this costs more burden on the customer. Ultimately the product cost is 110 or you can say 100 rupees and the customer has to pay 156 rupees because of all this tax structure. So this is eliminated in GST. Now let's see the same example how GST works with it. This is the example which we have seen right now. Now let's see how GST works with this same example. Say here also I am keeping the cost as it is. For example, 50 rupees is the manufacturing cost and the manufacturer is going to add rupees 50 as his profit or value addition on it. Then it will come to rupees 100. Now on rupees 100 he is also going to pay tax, but the tax will be calculated not on this 100 but on this 50 rupees, because this is the value addition he made to the product. So he has to pay 10% of this rupees 50, which comes to rupees 5, and the product he is going to sell for rupees 105 to the wholesaler. Again, when the wholesaler will calculate this as adding his value addition or profit, say here for example rupees 10 as his profit, the product cost is going to be 115. Now again on 115 he is going to add the tax based on this value addition or profit. Therefore 10% on this 10 rupees will cost 1 rupee as a tax amount, and the product will cost rupees 116. So ultimately the wholesaler will sell the product to the retailer for rupees 116. Now the turn for the customer to pay. The retailer will add his profit, say here for example rupees 10 as a profit, and the cost is going to be 126. Now he is also going to pay the tax on this value addition, that is on this rupees 10. So 10% on rupees 10 will be rupee 1. So the cost for the product will be 127. So ultimately the customer has to pay 127 rupees for the product. There is no tax on tax. The manufacturer is paying the tax on the value addition, say rupees 50. The retailer is also going to pay the tax on the value addition, say 10 rupees. If the wholesaler has added here 20 rupees as a profit, then he has to pay the tax on this 20 rupees, that is 2 rupees. And ultimately the retailer also has to pay the tax on the value addition or the profit he is going to earn, that is here it is 10 rupees, so 1 rupees will be the tax amount. Here you can see clearly that the manufacturer is going to sell the product for 105 and ultimately the customer is going to get it for 127. And in the earlier tax structure the same product will cost 156.20 paise to the customer, and now it will cost 127 rupees. This is just an example to make you understand how GST works. Now let's understand the GST concept one by one with goods, service and tax. Goods means the things which can be seen, touched and feel. Say for example motor car, computer, furniture or clothes, etc. On the other hand, services means activities provided by the other people, who include waiter, lawyer fees or charges, or doctor's consultation charges, etc. And third one, that is the tax. It is nothing but compulsory contribution to the state revenue levied by the government. The amount is later being used for public welfare. It is called as tax. There are two different types of taxes, direct tax and indirect tax. Direct tax includes income tax, that is the amount which you earn as your monthly or yearly income is more than specified by the government, then you have to pay some percentage on it as a tax to to the government. It is called as income tax. On the other hand, indirect tax includes, first is sales tax, which includes tax applied on sale of goods or services. Then the next one is entertainment tax, that is the amount we pay on play or movie tickets, that is entertainment tax. Next one is service tax, as we have seen in services definition, that is the service we borrow, say for example doctor's consultation, restaurant service or airline booking service. We pay the tax and that comes under service tax. Next one is custom duty. If we import or export the goods from other countries, then we have to pay custom duty. So this is also one type of tax. Then the excise duty. If any product is manufactured and sold within the country, then we have to pay the excise duty. So before GST, there were so many such taxes implemented with different tax rates. But now all these taxes were eliminated and GST is introduced since July 2017 in India. The implementation of GST has made the tax structure easy and simple without less complications. GST is further divided into three parts: SGST, CGST and IGST. Let's understand the terms under GST. GST can be divided into two types based on the place of transaction. First is intrastate, that is within the same state, and second is interstate, that is between the two different states. Intrastate includes CGST, that is central government GST, and SGST, that is state government GST, whereas interstate includes IGST, that is integrated GST, which is the sum of CGST and SGST. Let's take an example to understand this concept. Mr. Joshi from Pune, Maharashtra sold goods to Mr. Roy from Mumbai, Maharashtra for Rs 10,000. As the transaction is within Maharashtra state, Mr. Joshi will pay GST in the form of CGST and SGST, that is equal percent, say 9% and 9%. Therefore, 9% of 10,000, that is 900 to central government, and 9% of 10,000, that is 900 to state government, that is Maharashtra government. After this, Mr. Roy from Mumbai, Maharashtra sold the goods to Mr. Reddy from Thrissur, Kerala for Rs 20,000. Now this transaction is interstate or within two different states. Then Mr. Roy will pay IGST 18% to central government, that is Rs 3,600, 18% on 20,000. Later on, Mr. Reddy from Thrissur, Kerala sold the goods to Mr. Menon from Kochi, Kerala for Rs 30,000. Here Mr. Reddy sold the goods to Mr. Menon. Both belongs to same state, that is Kerala. So Mr. Reddy will pay CGST 9% and SGST also 9%, that is Rs 2,700 to Kerala state government. So this is how GST works. We have seen all the aspects of GST, what is CGST, what is SGST and what is IGST. Now we will take one example which is given in our textbook and we will solve that example using accounting package Tally. Remember, we are going to use education version of Tally accounting software. Do watch the next video for the problem. Till then, bye for now.